Liquidation is a common finance term that often sounds scarier than it actually is. Let's break down what it means for your money. At its simplest, liquidation means converting assets into cash. If you sell stocks or gold to get cash, you are liquidating those assets. Cash is considered the most liquid asset because you can spend it immediately without needing to sell or trade anything first. Liquidation happens in daily life when you rebalance a portfolio, but it also describes the formal process of winding down a business. It is important to distinguish between the act of liquidating and the state of being insolvent, which often signals a deeper financial struggle. Different assets have different levels of liquidity. Selling a stock takes seconds, while selling a house can take months to finalize. Think of liquidity as your financial flexibility. Having enough liquid cash ensures you can handle emergencies without being forced to sell long-term investments. Understanding these terms helps you manage your personal balance sheet more effectively. Thanks for watching, and see you in the next video.